Good morning, traders, and welcome to another Market Insights video. The Bank of Canada and the Bank of Japan both held rates unchanged yesterday and, of course, overnight, respectively. Now, Loonie fell after BOC turned dovish with a growth downgrade, whereas yen remains unchanged as Japan maintained previous forward guidance language. Now, those two events make a good opportunity to talk about CAD-yen cross, and while at it, we can just see what's happened with Aussie-Kiwi as well, as both the Aussie and the Kiwi have dropped to multi-month lows yesterday. So let's see which one rolls. So today is Thursday, the 25th of April. We are expecting ECB Vice President De Guindos' speech, quarter labor good orders in the US, and the initial jobs claims. Not such a heavy day on the macro front, I would say. So let's jump to the chart. Note that none of the recommendations here constitute investment advice, and losses can exceed profits. So CAD yen, we're on the 4-hour chart. I see two different scenarios. Okay, I'll start with the first one. First one is that we are actually looking at an ascending triangle pattern. Okay, and we have completed the impulse upside wave, and this is just a correction simply. So we could be looking to move up, then have another correction and break outside. For this, of course, to happen, we need to get some good signals here on the MACD and RSI, which at the moment we don't see. Okay, so we need some bullish hidden divergence to start forming on our charts. Now, obviously, this is a bit early to assume such a scenario, but it's very possible if this level holds, okay, if prices move up. Now, if this fails us, okay, so if prices break below this, we're looking at prices going below 82 at around 81.7 or around that level, okay. We're looking for a double bottom over here, okay. So pay attention to what happens around this area, okay. Now, the other scenario, we're looking at this as a corrective, longer time frame, in a longer period. We're looking at this as a correction wave. Well, pretty much inside, within the medium short term is pretty much the same scenario is expected to form, you know. We should be seeing prices moving up and then a correction, and from here breaking. Now, again, we would need to receive those signals down here. Now, what will really determine whether we have this pattern, correction, or the impulse after the correction, of course, the impulse triangle, it really depends on what is going to happen around this level, okay, around 84. Because if prices come here and go down, obviously we're looking at the second pattern. If prices move higher and come over here, then we are out. We're actually outside the triangle. Now, if we come back here and prices stop, we could look to for buys to step in. If that doesn't happen, price come down, and we're looking at this level again to hold prices. If that scenario doesn't happen as well, we see prices moving lower, then we're looking at going to 82.50 and then 81.70. Okay, I'm not sure if I went on the 1-hour chart. There we go. So all explained pretty much. Now on the RSI and MACD, we do get some bullish signs over here, some nice hidden divergence. So we can look, prices now moved up to 83.31, support or resistance. We might stay in this range for a while. We might get another triangle pattern here and break up. We don't know what's going to happen. This is the first wave, so everything is possible. We could get something like an ending triangle here, and then see how prices pan out around above this resistance level. Now, I want to go quickly on old New Zealand as well, the Kiwi. Both have been very weak over the past few days, as we said. Now, this chart, as you see, is the chart that I've actually drawn a week before. So you see that the opportunity here worked out exactly as we have planned. The first correction is seen as we talk. Now, we're probably looking at the shorter correction down to, up to B, and then prices moving lower. Now, what's happening with this is that we are seeing bullish signals on the RSI and MACD, okay? So I would be very cautious as to what happens around that level, okay, which is the 1.065 and 1.062, so this 30 pip range. I'll be looking to what's happening around here, because if prices move higher, then we could reach, we can go up for a new high, okay? In case prices move below this trend line, then this will be probably most likely invalidated, and we're looking at prices to moving at least at 0.158 or even lower to reach the 50 Fibonacci or even the 61 Fibonacci, which is in confluence with the previous support level. Now, down on the 1 hour chart, again, I will be very cautious as to what happens around this trend line. We have retested this level, previous high, okay, at 1.0622, and this top will play its role over here. So if prices come here and get rejection, we're looking at least a move to down here, or even maybe if we get a good force from bears over here, we're looking at the break of the confluence level of this ascending trend line, as well as the support, and prices to move around 10.58 to complete wave C. Now, the question is, how deep is this correction going to be? Well, it might be deeper than just that, but that would depend whether we receive some bearish signals over the RSI and the MACD, and at the moment we don't receive anything. So I would expect this to develop a little bit more to have to receive any further clues. Okay, now please note that I will be away on annual leave for a week, so James is going to cover. Thank you for being with us today. If you like the video, hit the like button, share it with a friend as well. Recommend that you keep an eye on our blog. It's where we'll cover the latest news, publish trading ideas, and provide all the necessary tool trader needs, serving you responsibly.